All right, now we will be looking at the screen scenario 2 of SBR March June 21 exams, right? And here it is. Bismuth Company is a mining company. Investors is Bismuth Company receive funding from mining projects as a return on their investment. The year end is 31st December 2007. And the following exhibits available on the left hand side of the screen provide information relevant to the question. Okay. Impairment testing of mines. Firstly, uh, in exhibit 1, we'll find related to impairment testing of mines. Okay. And then, which describe the decommissioning provision associated with Bismuth Company mines and its potential impact on the impairment of the mines. Number 2 is Class A and B shares. Explain the sales of Class A and B shares in exchange for Bitcoin, a cryptocurrency. Okay, I taught this lesson in last two sessions, including in last two sessions to the students and those who watched my videos and took the classes definitely did well in this question. And then blockchain technology provides information about the ethical issues created by the implementation of blockchain technology. So now here is the requirement first. Discuss with the suitable calculation whether Bismuth Company should recognize an impairment loss for the mines. 5 marks available. Now what we will be doing, simply going to the exhibit 1. At 31st December 2007, Bismuth Company owns mines which have a carrying amount of 200 million. The company has committed itself to decommissioning its mines at the end of their useful life, 5 years or less, and has created a decommissioning provision of 53 million. However, the directors are unsure how the decommissioning provision will impact on the impairment testing of the mines at the end of useful life of its reusable components will be dismantled. The following information relates to the decommissioning of the mines at 31st December X7, carrying amount of decommissioning provision 53 million. Okay. Present value of the future cash inflows, sale of reusable components and decommissioning date 20, sale of minings output from 31st December X7, date inflows 203, and finally operating costs from 31st December 2007 to decommissioning date outflows 48 million. Right. So simply let us start drafting the answer on this part of the question. So here it is. Let's start it. Question number 2A. Most liabilities ignored when calculating. Recoverable amount in impairment testing. However, uncertain liabilities such as the commissioning liabilities, cannot be separated from the related assets. IS 36 impairments of assets requires the carrying amount of a recognized liability to be deducted from both the carrying amount of a cash generating unit CGU and the amount determined using the value in use. Bracket short form VIU. Okay, the recoverable amount of the asset should be determined. Should be determined using the VIU model and IAS 36. Now, the amount of the decommissioning provision the amount of the decommissioning provision is used to calculate the net recoverable amount by deducting it from the VIU amount. The net recoverable amount is then compared to the carrying amount of the CGU, which should be adjusted to include the decommissioning provision in accordance with IAS 37. IAS 37. Okay. Cash flow projection should be based on reasonable and supportable assumptions. The most recent budget and forecast and extrapolation for periods beyond budgeted projection. IAS 36. IAS 36 that presumes that budgets and forecasts should not should not should not go beyond 5 years. For periods after 5 years, extrapolation should be used from the earlier budgets. In this case, mines as a life of 5 years or less, and therefore, the cash flow projections can be used in the impairment testing, right? Impairment testing. So now what I will be doing at 31st December 2007, yeah, and one heading is there, the millions or dollar sign. Okay, first present value of the cash in components of here the value is 20 million. Okay, then present value of the future cash inflows from sale of mining output from operating the mines minus 48 carrying amount of decommissioning provision amount. You should not use such short forms in your exams. Okay, I'm doing it because my paper is passed already. Anyways, is equal to sum. Bracket open, drag and drop. That's it. 122 million is the recoverable amount. Now, what I'll say, carrying amount of mines is 200 here. Carrying amount of decommissioning provision minus 53. net carrying amount of mines simply 147. The recoverable amount is less than the carrying amount, and hence there is an impairment charge of 25 million. How? You can see over here, equal to sum 147 minus 122 million, 25, right? So this is the answer of this part of the question. I hope you get it. Though in examination, use the worksheet for the theoretical part, and for the calculation, use these Excel sheet, right? Okay. So far so good. Now let us move over here and let's look at the second requirement and what they're saying. Discuss whether the class A and B shares should be classified as either equity or liability in accordance with IAS 32 financial instrument presentation. Okay, so let's move to the second exhibit. Bismuth Company. Okay, yeah, Bismuth Company has issued two classes of shares, Class A and B, in exchange for a cryptocurrency, Bitcoin. Both types of shares permit the holder to vote and give an entitlement to rewards. Bismuth Company has discretion over whether rewards are payable on Class A and Class B shares. Bitcoin can be readily converted into cash in Bismuth Company jurisdiction. Class A shares are redeemable at par in the event of Bismuth Company obtaining a listing on a formal stock exchange, which is highly probable. On listing, Bismuth Company has a choice as to the method of redemption, either cash to the value of 1 Bitcoin per thousand Class A share, of to the value of 2 Bitcoins per thousand Class A shares. Bitcoin equates to approximately $12,000. The share settlement option A above would involve exchange Class A for the equivalent number of Class B shares. Class B shares have never fluctuated in value. Bismuth Company is not compelled to redeem the Class B shares, but these shares do contain an option allowing Bismuth Company to repurchase them. However, if within 2 years, Bismuth Company fails to exercise its call option on the Class B share, it must pay an additional reward to the holders of Class B share. Okay, so far so good. Now let's start drafting the answer for this part of the question, right? So what I'll say, IS 32 financial instruments states that a financial instrument is a financial liability if it provides that on settlement the entity will consider or will deliver either one, cash or another financial asset, its own shares, whose value is determined to exceed substantially the value of the cash or other financial asset. Bismuth Company has discretion over whether rewards are payable on Class A, Class B A shares, and Class B shares. Okay. The rewards are essentially a dividend paid on the investment. This would seem to indicate that both instruments should be classified as equity. The Bitcoin can be readily in this company's application, and therefore can be treated in the same way as legal tender or cash, also known as flat money, FIT money. The possibility of Bismuth Company listing on a stock exchange is a contingent settlement provision. Bismuth Company is able to avoid listing shares on a stock exchange if it so chooses, but is unlikely to do so as the listing is deemed to be highly probable. Thus, the Class A shares will be classified as a liability because the value of the share settlement of 1,000 Class A instruments at 2 Bitcoin substantially exceeds that of the cash settlement option of 1 Bitcoin. For the same number of instruments, and Bismuth company is implicitly obliged to redeem the instruments for a cash amount of 1 Bitcoin. Okay, then if Bismuth Company is in a difficult position as regards information gained at a previous employer. In general, she should respect the confidentiality of information acquired as a result of professional and business relationships, and therefore not disclose any such information to third parties without proper and specific authority, unless there is a legal or professional duty to disclose. Additionally, she should not use the information for her personal advantage, although the situation will depend upon the nature of the confidentiality agreement with her previous employer. This agreement may have been made in order to protect commercially sensitive information and to prevent her from sharing such information with Bismuth Company. Right. Further,